Hello, and welcome back to Crypto Clarified. My name is Davina Shilinskite, and I'm responsible for digital asset research at Wisdom Tree Europe.
And my name is Vin Tran, Associate Director of Business Development at Wisdom Tree Digital Assets.
Today we have a very interesting discussion because we're looking very much under the hood, because we're talking to Johnny, founder of Linkpool, and Joe, who's responsible for their strategy and business development. Hello, Joe and Johnny, great to see you here. Welcome onto our podcast. To begin with, imagine that I'm somebody or one of your friends who has no idea what crypto is. How would you introduce Chainlink to them?
That's a good question. So I just basically say Chainlink is the network that connects the real world to the blockchain in crypto world. It powers the smart contracts to remove middlemen, basically, within the industry.
Excellent. And as it removes middlemen, does it play a very active role across the industry? Like, what does the industry rely on from Chainlink perspective?
Sure, yeah. I think it's one of them things where people don't realize how much of the industry depends on Chainlink. Pretty much the entirety of DeFi is backed by Chainlink oracles, and has been since the wave of the DeFi summer in 2019. So I suppose for a bit of background, right? So I've been involved in the Chainlink space since like the early days, since like 2017. We was the first independent node operator on the Chainlink network when it first launched on mainnet in 2019. So we was really at the forefront of like DeFi summer, and the DeFi boom really back then, and so the wave really in the entire boom of it, especially with the early projects like Arve and Synthetics back then. So really the Chainlink as a decentralized oracle network is the backbone really of DeFi in the entire crypto network, from lending markets to DEXs to derivatives to like prediction markets and everything else. It's it's the infrastructure that sort of powers everything behind the scenes, but no one has an idea it's there, which to me is a testament of it actually does its job right, because it's sort of the the layer that connects a lot of the DeFi and crypto world to make things happen, but people don't really see it happen. It's just a lot of people have been part of that since 2019, especially when it went on mainnet.
That's fascinating. So Chainlink has been around for many, many years. Have there been any recent changes that make it even more relevant today than it was, let's say, 5 years ago or 8 years ago?
Sure. So the main thing really over the past, quite a few years, is the adoption of Chainlink within the institutional space. So starting to see a lot of this around stable coins, RWAs, and institutional adoption, especially around like significant funds or clearing houses, that kind of thing. Chainlink do a lot of work on this and do very well in that regard. From a Chainlink network point of view, the product suite and I suppose the offering of the Oracle network has expanded significantly over the years. And it started off in the early days as simple price feeds, but those simple price feeds allowed the boom of DeFi. And then, now we're looking at something called CRE, which is, I suppose to try and explain it simply, is like a generalized compute platform within the crypto space that basically allows anyone to run sort of any code across a series of oracles, which then can provide an answer or do some form of computation on chain, which again, is going to be that transparent sort of infrastructure layer that people don't really see, but it will be powered. It will power many things. A real world example of that is within Arve V4. The risk manager, Llama Risk, are looking at using the CRE to provide like real-time dynamic risk management into Arve V4. So, that will be powering a lot of the markets that people use day to day, and, is prevalent within DeFi. It's one of the things that really, unless you read more into it, right, and understand it, you don't really see it's happening, but it's nevertheless cool.
And to double click on that, Johnny, when you say it powers a lot of RWAs, a lot of this more infrastructure type layer on the back end, can you provide examples on the RWA perspective? And what does that really mean? So you mentioned things like nodes, you mentioned things like price oracles. I think for viewers that have never heard these terms before, what does that mean?
Sure. I suppose a simple example is stable coins, right? So everyone really understands, the representation of USD on chain. Um, and, going forward, especially with the like clarity of like regulation in the US, stablecoin issuers will need to provide proof of reserves on chain to show the backing of stable coins, that they're actually backed by the dollar or tangible assets, right? So one of the simple things that Chainlink can do there is by proving the reserves of stablecoin issuers, that all of the dollar that's minted on chain, so the USDT, USDC, or variations, are represented by actual dollars on the back end. So when we talk about sort of like connecting the real world, right, that's a prime example of looking at actual reserves and then reporting that on chain. And the beauty of that is, because you're then reporting that data on chain, you can then do automated actions based on that data, whether it's like blocking mints, burns transfers, and having like safety mechanisms to make sure that if something bad happens, it protects the users that are using that stablecoin.
Got it. So it really properly the bridge from a data perspective, right? Bringing this data off chain and bringing it on chain. And then when you mentioned nodes, you guys being you mentioned one of the first or the first node operator for Chainlink ecosystem. What does that mean?
Sure. I mean, in simple terms, I feel like people understand like Bitcoin miners or Ethereum validators. Um, and it's the same premise, but for the Chainlink network, it's just that technically and economically, it's very different, right? So, I mean, ultimately, Chainlink is a decentralized Oracle network, and what that means in practice is that you get lots of different independent parties, all running their own infrastructure and nodes that powers that Oracle network, right? So, yeah, we're one of them. One of the largest and have been around since the very start. So um, it's something that rose the company to success and something that we understand very well.
Got it. And I think my last on a high level question is from your point of view as a node operator and then within the Chainlink ecosystem, what are blockers that you think, whether it is education holistically from an industry perspective, is it technology, is it regulation, um, that is blocking the development of this new wave of whether it is on-chain data or whatever you guys are doing on the infrastructure side?
Sure. I mean, regulation plays a big part, and I feel like, across many jurisdictions now, you're starting to see a lot more clarity, at least, which at least gives the framework for like larger companies to be able to work to be able to adopt this technology. Um, a lot of it is education and understanding as well. Because really, I think, like crypto over the years, especially throughout the boom and bust cycles, whether it was the ICO phase in 2017 or a lot of the like bigger DeFi projects and the wave of like Solana meme coins, for example, a lot of aspects get like a bad reputation amongst the public. And I feel like at least now you're starting to see a lot of that like die down, and really the true value of what it can do is starting to come to the surface. So you mix that with regulation clarity and then just education pieces. I think you'll see to start to see a lot more of it be adopted. I mean, you can pretty much see it all the time. I mean, ultimately, for large institutions and like people wanting to adopt this technology, it really gives a couple of main benefits, right? So it's like audit trails, transparency, and reduction in operational costs, right? Really, like it's just something that will allow people to streamline, like intercompany agreements, how people manage money, and everything from their own funds to, like how they like do cross-border payments and all that kind of stuff. It's just being able to take that right and making it a lot more simple than the traditional systems that you have today. I think like crypto overall will be, there's always going to be the wave of, I suppose, like native, like cyberpunk, like true DeFi. But I think a lot of it over the, a lot of the future, especially like, I suppose, like new money or fresh money coming into the space will be largely, a lot of it will be institutional. And that institutional money will be like RWAs and stable coins, and a lot of it will be settled between, public and private chains and sort of consortium chains, right, between like large parties wanting to manage agreements and money between them, between each other.
Maybe to add on that, internally we always talk about like the clear chain and the dark chain, and that resembles a lot of what we've seen in the early days of the internet, so the clear web and the dark web. And I think what happens now with all the institutions moving on chain, and especially RWAs that need compliance, that need KYC, KYB, this clear chain will emerge where it's still the underlying same technology and it locks the assets, but there will be add-ons to it, like the compliance layer. And obviously Chainlink plays a huge role in that as well. They just built the ACE, the automated compliance engine, which essentially enables institutions to like get all that compliance work done easily and connected to the blockchain.
You touch very, very interesting point, and I would like to explore it deeper. You were one of the first ones involved with Chainlink, many years ago. You saw how it looked at that time, and you have seen evolution to today. Like, what were the key changes and what drove those changes over time?
This might sound crazy, but in the early days of Chainlink, there was always, I suppose, like a rumor mill, an enthusiastic community, right, about a lot of the work that they was doing at the time with like larger players and like institutions. Even in the very early days of Chainlink, the like founders, for example, with some of the early work that they was doing, did like a POC with like Swift. They had like a smart contract sort of like digital platform online. So there was always like enthusiasm, so to speak, within the community. And for us, it's just, being becoming a professional shop as well and evolving over time as the network has grown. Really is just sort of realizing the vision that a lot of the enthusiasts heavily bought into in the early days, right? And just seeing that play out. A lot of it is a lot of passionate people and a lot of true cause knowing that, we're on the cusp of actually building something great here with new tech that does something different that's actually usable in the real world, rather than, I suppose like vaporware or anything else that you see like within the tech and crypto space.
Interesting color. And now just let's spend a couple of minutes, or not a couple of minutes, let's spend some time on staking. So we know staking within the Ethereum blockchain, where the purpose of it is to validate transactions that are happening on the Ethereum blockchain. Understand that there is difference between staking that Ethereum has and staking that Chainlink has, because their staking is more linked to the accuracy of data. Am I right? And can you please just talk about this in simple language, just to explain the difference about what participants actually validate and how they get rewarded and where those rewards are coming from?
Sure. I mean, probably to make it easy, I will go back to the question you asked in the beginning, like how I would explain blockchain or what smart contracts do to people that are not in the know. And I would say smart contracts are actually not that smart on their own because they can only see in what happens on the blockchain. So a good example of that is, for example, time. So the blockchain or the Ethereum blockchain, it does know like the blocks that are being validated, but it doesn't know time. And the same applies, for example, for like certain prices. And that's where the Oracle problem came into like existence. Like, how can we get that data on the chain, right? And essentially, you could use an API to feed data on the blockchain. But if you would just use an API, so to say, then you lose all the properties that the blockchain has, and like that is valuable. And Johnny mentioned them earlier, like immutability, audit trail, and all of that. And so that's where decentralized Oracle networks come into play. And specifically, for example, the Ethereum USD price feed, which is the one that is currently secured by staking. And that's essentially riding the Ethereum price on chain continuously, so that smart contracts can consume that price and do certain computations with it. And as I said, if you would just use an API, then someone could manipulate that API. And then in simple terms, a decentral Oracle network is essentially like a decentralized API. So the price is fetched at different places from different operators and then written on the blockchain. And that whole process obviously has certain trust assumptions that all the operators don't tamper with the price, and then also that the sources where the price is coming from is reporting a correct price. And that's where the staking of Chainlink comes into play. Currently, it's a very early iteration, but essentially it's putting up collateral against that whole workflow that I just described.
Interesting. And why does Chainlink need liquid staking to make it scalable?
So this is like a general question, I would say, about staking, because staking is always binding the collateral, and then the collateral in essence becomes illiquid and you cannot do anything with that. And for a healthy ecosystem, especially in like all the DeFi applications, it's very good to have that collateral accessible and to do stuff with it. And I mean, ST-ETH is the example for the Ethereum blockchain. And then what ST-Link is doing is pretty much mirroring that for Chainlink. But what I would say is that Chainlink and the decentralized Oracle networks, they power all of DeFi. And so it's very, it's very important that these mechanisms that actually secure that whole DeFi ecosystem become accessible in that same ecosystem. And that's what we set out with stake.link and ST-Link, to make that collateral that is securing DeFi actually part of that whole ecosystem.
Interesting. Just to spend a couple more minutes on this one. So ST-ETH, they solved the liquidity issue that staked ETH has, because we saw at the end of last year that unstaking queue reached approximately 50 days. That's 50. Do you have similar liquidity issues with staked Chainlink?
So it's very important to say that staking Chainlink is currently a very early iteration. I think there's a blog post on the Chainlink Lab site from 2023 that like details the whole roadmap, and I would encourage everyone to have a look at that. And yeah, for the moment, it's hard capped at 45 million link staked, and it's just securing the Ethereum USD price feed. So right now, there's actually more demand to secure that price feed than there's supply. So the hard cap is maxed out all the time. And stake.link actually with the LST is one of the ways for people to access that pool. Because we build an automation to refill that pool when someone withdraws. But if you look at what Chainlink does, the price feeds, but all the other services like CCIP, and Johnny mentioned CRE earlier, it's very easy to see that this is like an integral part of the blockchain economy, especially if RWAs and tokenization take off. And in that sense, the whole system will grow, and the whole system will need stability, especially on the collateral side, to make sure that all these data points that are written on chain are secured by collateral continuously. And in that aspect, like a whole withdrawal queue, like we've seen, for example, with Ethereum, could be detrimental to the whole security of the system. And that's where the LST comes into play. So we haven't seen an incident like that, which is just because the system is still in its infancy. But with all the growth that is projected, it's very easy to see what central role the LST could play in securing the on-chain economy.
Amazing. So let's change gears a bit. I think this whole conversation was about Chainlink, about staking and node operating, uh, giving you guys a chance how to talk about link pool and stake link. How do you guys participate? Obviously, we mentioned the whole being the first node operator in the Chainlink ecosystem. How else do you participate? How do you enable participation? Let's talk about that.
Sure. So Linkpool is at its core an infrastructure company, right? It's my background, and in terms of what we do day to day in the engineering effort and our capacity, we're a significant player, I suppose, in the largely in the Web3 space, offering infrastructure. We was like any sort of startup company way back when we first started and used like hyperscaling cloud providers. So AWS, we used GCP. Over the years, we've really expanded to the point where that isn't feasible for us anymore. And, in 2023, we moved to our own racks and started buying our own hardware, simply because within the crypto industry, especially if you're a large infrastructure provider, the compute costs become enormous, especially at the current point in time, right, in the industry with the AI boom going on and the price of memory and disk. So, taking that into account, we've significantly scaled up and are currently actually doing data center migrations as well to 3 locations in Manchester. So we will be building out our own cloud offering with a niche in the Web3 space. Typically to be technical, it'll be like a managed Kubernetes solution over 3 availability zones with a huge east to west fabric at over 1.5 terabits, which is pretty cool. It's one of them things where we built the products, like we built it for ourselves because it's what we need to run the company and all of the infrastructure that we run in the Chainlink space and all of the different validators that we run. And then we got to the point where we was building it and we was like, this is actually a very good product, right? Like we should sell this because, we have extremely high requirements and demands for ourselves, and are currently, like building out new infrastructure to be able to scale the company with, at least over the next decade. And, it was a lot of time and money that we've invested into doing this. So at the minute, over the course of this year, that's the main thing that we've been building. I've had many 12-hour days sat on the floor of the data center with my laptop, which has been fun. I love those days. I'll grumble about them at the time, but very much love them. And yeah, for us, it's really building out our infrastructure portfolio on what we can offer. Because ultimately, we'll be able to come into this space and offer compute that is very much cloud-like, better than what you'd find at the hyperscalers, for cheaper than what you'd get, like far cheaper than what you'd get, even at the likes of like OVH and Hetzner. So I do believe on that side as well, we can be quite disruptive with the products that we bring into market on that side, because it's very much an engineering team building a product for themselves, right, rather than product managers and like a business team trying to craft a product in that sense. So yeah, over the course of this year, that's the main thing that we've been building. And yeah, on the DeFi side, really for SDL, with the DAO, it's really about ingraining ST-Link throughout DeFi. So one of the big things that the DAO did this year was getting ST-Link live on Morpho for lending, with WST link to link pairs and also to stable coins as well. So for us, it's important, if we're doing an LST or a liquid state token, that people can then use that collateral to be able to do different things with it, whether it's, seed it into liquidity pools to provide liquidity or borrow against it. Just doing that and making sure it's available is super important to us on that side, because what's the point of an LST if it's not liquid, right? Defies the whole purpose.
And maybe to add on that, and I think I mentioned it earlier, so I mean, Chainlink is powering all of DeFi, but the Link token itself is not part of that. And with the LST, we're trying to make Link really part of that DeFi boom it's supported. And I think one of the biggest stats we can cite here is that on Aave v3, I think there's around 13 million Link sitting there. And it's pretty much idle because no one borrows that link because you cannot do something with it. So their API is, I think, like 0.1%, 0.2%. I'm not sure about the exact numbers. And like with the LST, we are trying to unlock that idle capital and make it productive via staking.
You guys touch on two major points in crypto right now, which is compute, and then the second part is DeFi yield. And I would love to double click on both. So from a cloud perspective, you say you're building this for yourselves as the engineers. What do you think adoption looks like for you? Do you think it's crypto native in nature, or do you think it expands beyond just crypto use cases? I think that's my part one question. And then on the DeFi side, you want Stake Link to be, you said you recently got it a part of Morpho into collateral low to be able to be collaterable on Morpho. Why is that important for you guys?
Sure. To touch on the cloud point, so it's very much going to be targeted to the Web3 space to begin with, especially, there's a lot of projects and teams, foundations who will be using like hyperscaler, clouds, the likes of like AWS, like well-funded like foundations, right, that have racked up probably AWS bills that are attuned to like, 5-6 figures a month, which happens a lot quicker than you might think it does with the prices that AWS charge. You'd be honestly very surprised. So really we can essentially offer what is better performance for a fraction of the cost, just because from our side, we own the hardware, we've built it ourselves, and bandwidth for us is across dark fibers that we've installed ourselves. So it's ultimately just using the latest tech and like building something that we need because our requirements are high, and just being able to offer that to other people. Adoption for us is, if we see good traction within the Web3 space, ultimately it's just general compute, right? Like, this can be offered throughout the entire tech industry, especially within the traditional like SaaS space and like tech companies. Everyone's using containerized like container orchestration solutions, and the significant majority of that will be Kubernetes. And everyone will be wanting managed databases in the form of Postgres and everything else, which is the stuff that we are very good at and do every day. So, for us, it's targeting what we're good at and what we're known in, right, which is within the Web3 space. But it is then incredibly easy to be able to take that base and then expand upon that, really, because for me, it's, if I go back 4 years in time when I was looking at alternatives for like cloud and infrastructure, basically, and I found this, then I would have started using it in a heartbeat, right? Which is, for me, like, I know we're building something good because if I went back years ago, I would have picked this, myself. I suppose luckily there wasn't another solution like this at the time, because then I wouldn't have gone on to actually building it out myself. So swings and roundabouts, but yeah.
And maybe let me just add there. I think our belief at Linkpool as well is, I think now we are penetrating the finance domain with the blockchain. So the banks are there, the asset issuers are there. So asset management is looking at this. But we're seeing every domain becoming a Web3 company in the future, especially with like all that AI craziness that is happening, because the traditional web will become unusable at some point. And so we're pretty much setting ourselves up to be one of the infrastructure providers in that new economy. We start with the Web3 space, but then we also think that other domains at some point will move more into that direction, and we will also move into the direction of other domains in the coming years.
This sounds incredible and fascinating, and I honestly quietly applaud you for being able to focus on items like this. What is one thing about building in crypto that most people outside crypto industry do not appreciate or do not understand?
Do you want to take this, Joe? Because I feel like you've not spent as much time, and I'm tainted by the the 7 years.
Yeah. So I joined Linkpool over a year ago in a full-time role. I've been following the space more from the outside for quite some time, and I have more like a professional background in like TradFi, VC, management consulting. And I think from the outside perspective, the industry is often like perceived as pretty unprofessional. I mean, a lot of stuff is happening in Telegram, not an email. So there's this notion that it's like illicit activity, it's a little bit shady and all that. But I think what is underappreciated is the speed at which the industry operates, because decisions are being made fast, discussions happen fast. No one is like spending too much time on like corporate style calls. So if there's something that needs to get done, like different teams will collaborate very fast, be it in Telegram, be it in Slack, and get to a solution. And I think that speed is unmatched with like any other industry. And I think that makes the beauty of the Web3 community. And I think also with AI, the penetration and adoption of AI solutions like agents and all that, not just for trading, because I think that's the notion again that everyone would say, yeah, but then they all build just these trading agents and all that, is the highest in the Web3 community. And we are building some incredible infrastructure stuff with AI. Johnny, I don't know if you want to expand on that, but I think that's the beauty of the Web3 industry. It's at the heartbeat of innovation, and the speed is just unmatched compared to every other domain.
I agree. Speed is unmatched, and also it never shuts down. It's 24/7 world, which makes it incredibly interesting and challenging for everybody involved. But just going back to two of you and your experiences, what has been the hardest part in building Linkpool or StakeLink? Like, what has been the biggest challenge that you had to overcome over time?
I mean, honestly, I'd say within the last 18 months to 2 years, has been the problem of scale, which is obviously a good problem, but it gives us a significant amount of headaches, right? Which is, technically it's why we've invested so much time and money into the new infrastructure and everything that we're doing in the new racks. But, even if you're taking that and, redeploying the 10 plus terabyte of RAM that we've currently got in the racks and the thousands of CPUs, like being able to do that with zero downtime is significantly difficult, right? As you could probably imagine, you're essentially moving thousands of apps that you currently run across different locations, and doing that seamlessly with flawless technologies is difficult. So, I mean, from a Linkpool side, that's definitely the problem. I mean, Joe, do you want to touch on the Stake.Link side?
Yeah, sure. Happy to do so. I mean, you pretty much covered like the infrastructure side. And I think from a business side, this industry has a lot of like misaligned incentives. And that's because there was so much ICO, VC activity, so much money being poured into projects. We see a lot of these projects currently dying in the bear market. And these are projects that have been funded with millions of dollars. And I think it's fair to ask, where did all that money go in like 1-2 years? And it's pretty clear where it goes. It goes to like listing fees. It goes to marketing and promotion. So there's a lot of like money spent just to hype things up and to create like this notion of like fast success. And at Linkpool, and then also at Stake.Link with the 14 other node operators that are part of it, we have a different view on building things. We are in it for the long term, so we don't want to engage in any like short-term like reward activities. And this is also why sometimes it may feel that we are growing slower compared to other protocols. But it's just because we are building for the long term, and we are spending the money wisely, and we're not in the game of like hyping up a token or hyping up a product short term and then leaving after quite some time.
I think you make a great point there, Joe, about incentives and aligning incentives internally as an industry. And I couldn't agree more that I think going back 5 years, the industry has changed so much from chasing incentives on a specific pool or specific protocol to now seeing that maturity and seeing more people build in the space in a way that's slower. And I think the difference, and it might be one is going to overtake the other, or it might be in parallel, but the idea that what traditional finance companies, what institutions are trying to do is really rebuild the financial system on chain. And that takes another level of clarity, another level of regulation to get us there. So I really agree with both of you when you mention uh, the evolution of this. So now looking forward 5 years down the line, 10 years down the line, what do you guys think drives adoption, whether it be industry wide or specifically for this use case within the Chainlink ecosystem?
Yeah, so as I said, I think smart contracts, they will take over the world. They will take over different domains. They will start with the real world assets and like the whole tokenization thing. And then Chainlink will play a key role in all of that domains because, as I said, if smart contracts take over the world, smart contracts are not that smart on their own. They need data, they need connection, they need events to trigger stuff. And so that's where I think we will see a lot of growth. But obviously, this requires a lot of focus as well, right? To get one domain right will like be an effort from a lot of people, from a lot of different entities, maybe Chainlink Labs, maybe Linkpool, maybe other node operators. So I think the next few years will be dominated by that finance domain. And then I think we will increase speed and like can go after other domains in a standardized way. And yeah, we are here for the long term, as I said. So we can't wait to tackle all the challenges.
Thank you for that, Joe, on the 5 year vision. And then now, kind of going back to what you guys are trying to accomplish over the next 12 months to that period, what is a couple milestones that you guys wish to achieve?
Yeah, so on the stake.link side, I think it's to grow the ST-Link LST within the boundaries of the current hard cap. But that will be alleviated at some time, and then we will see rapid growth. And then like really make ST-Link engraved in DeFi. As Johnny said, we have a Morpho pool live. We are on Volksfinance, but we also have a proposal to be listed on Aave. And so yeah, we are really looking forward to get onto Aave as well, and then build like all that DeFi connections from there. And yeah, from the Linkpool side, maybe Johnny, you want to tackle this?
Yeah, I mean, the Linkpool side's pretty easy, really, because it's just more compute. So, you know, if you ask me at the end of this year, I'd just say more compute. If you ask me at the end of end of next year, I'd just say more compute, maybe in a different place, and then just rinse and repeat that for the next 5 years. To be honest, because I mean, in crypto and in AI, and just I mean, in the entire world, to be honest, everything is focusing on compute. Like everything is trending towards compute. Everything needs compute, and everything needs compute being done very well. Pretty much every industry depends on it these days. So I mean, for us, that's the most important thing. And yeah, really, you know, like Chainlink is going to be at the center of adoption of institutionals and TradFi within the crypto industry.
Yeah, I think it has like AI has this compute angle, but I think what many people dismiss as well, I think the thesis on AI, everyone agrees on, right? So AI will change the world. But what does that mean down the line? It will also mean that it will change the web that we know, and it will like lead to like changes in trust assumptions if we trade, if we interact online. And we will need cryptography, not necessarily blockchain, but cryptography. unless the quantum computers like break our current encryption now. But I mean, there's solutions for that being developed, and I'm sure they will be in place in time, because it has like military aspects as well. So the two technologies are actually highly synergistic. So an AI-powered web needs cryptography and blockchain to function fully. And I think if I could wish for something in the next 12 months, is for people to realize how intertwined these two things really are. And then people like getting behind that idea, like they get behind the AI idea that agents going to change the world.
And maybe to wrap up, I think that's a great point. And we read oftentimes like maybe blockchain wasn't made for humans. Maybe they were made for AI agents. And I know, Johnny, we were talking about milestones for you guys, and we brought up the idea. You mentioned compute, right? I think AI is a natural conversation that we'll probably have you guys on in the near future, hopefully, to talk more about that. But bridging that gap, you mentioned it is important. Why is that important? The bridge and the parallel nature of AI and crypto.
I mean, it's important because, I mean, ultimately, like smart contracts and just the power of having decentralized money is a very powerful tool for agentic workflows in the future, right? It's essentially given an interface and a mechanism for agents and AI in general to be able to transact between different agents on chain and across between like any party that it basically wants to interact with without anyone in the middle. So removing the middleman, like I focused on before. And so really it's going to be an incredibly powerful tool in that regard. And if you look at crypto with AI and then think of the amount of compute involved, it is really like three big pillars in that sense in terms of what is needed. I don't think any of this is going away. You go through various cycles and waves of enthusiasm and the sort of view of the narrative of where things are online. But I mean, it's never going away, right? It doesn't matter how long or what's going to happen. Like the tech is here to stay. I think it's going to be a very powerful tool in the future, and AI is definitely going to play into that because, for the first time in history, really, you're going to get automated models being able to transact and do things and, form agreements with other models, being able to do that in a trustless way with money involved, I suppose is a simple way of looking at it.
Thank you so much for this incredible discussion. I'm sitting here listening to you both speak, and I try to imagine the world 5 years from now, where everything that you built actually has been built and actually works. It will be a fascinating place to operate in. And I look forward to keeping in touch and just updating each other on the more recent developments over time. Thank you.
Thank you, guys.
Thank you.
To clarify, the views and opinions expressed in this podcast are those of WisdomTree and Linkpool and are subject to change. Anything we present in this podcast is not intended to be relied upon as a forecast, research, nor as investment or tax advice. The information and opinions expressed in this podcast are not a recommendation, offer, or solicitation to buy or sell any securities, and reliance upon them is at the sole discretion of the listener. Please remember, past performance is no indication of future results.